Good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Monday, and it's January 23rd. We got no economic news release scheduled for today. We got headline news is the stock market's down a bit. As you may remember, we had the inauguration on Friday for Donald Trump to become president. So things were kind of taken through in the inauguration address was he didn't really provide a whole lot of details to his tax cuts and deregulation. So this is, of course, investors are kind of pulling back and kind of looking at this and trying to figure out, okay, what are the specifics? They've been on this euphoria since the election, talking about this grand scheme of things, but there hasn't been any details explained to them as to how this is going to be carried out. So now they're taking kind of a bit of a break. You've been kind of seeing it here and there for the last week or so when you see the pullback on the stock market this past week or so, and today's no different in that regards. More earnings reports coming out today. We have some big companies that came out today, like McDonald's and Yahoo, those folks. But so far, we had 54 companies that reported thus far, and 74 of those are beating estimates by median of 5%. So that's absolutely, so we're doing pretty well so far on those companies that are coming out with their earnings reports. Now, one of the things that they're not only looking for right now in their earnings, but they're looking for their outlook with what these corporations feel, what their outlook will look like under a Trump administration. So they're looking at a little more than just the numbers. They're looking for outlooks as well. And also, as we started this, the Fed just started buying. I misspelled here. Fed. That's supposed to be D. Fed buying about $2 billion worth of mortgage-backed securities today. So we'll see the impact of that here in 1 second. So we actually were down about here. We were about 28, up 28 basis points. And since the Fed started buying, we right now are up to about 41 basis points. So we're up now against the 10-day and the 50-day moving average here, as well as this first ceiling of resistance. So we have come back a little bit. As we saw on Friday, we started way down here, and then we actually closed. We were down quite a bit, like around 20 basis points or so, and then closed above about 6 basis points. And then today we've taken off since then as well. In that time period, the 10-year Treasury yield was on Friday, it was even as high as like 2.51. So it hit that psychological ceiling as we were kind of talking about, like 2.5. And now, so far at this moment, we're down to about 2.4. So this is why the bond market's kind of taking off as we do go. And we do have a couple treasuries being sold this week. I think like 3 days this week we got the Fed's going to be selling treasuries, so we'll see how that goes, and that hopefully will maybe bode well for mortgage-backed securities here. So let's go ahead and so the good news is interest rates are better than where we left off on Friday. We're kind of reaching the terms of where we were actually on Wednesday almost here. As we were right up here, we were a little bit higher, but we're closer to the pricing where we were last Wednesday. Alright, folks, so anyways, if you guys want to get more updates throughout the day, just come on over to Twitter. I do post on Twitter my updates. Otherwise, I hope you guys have a wonderful rest of your day. Thanks so much for watching. We'll see you guys tomorrow. Bye-bye.